Ladies and gentlemen, K Kim here. Today is April 24th, 2020 Friday. Market has been just closed. So welcome to the market update. Hope you guys had a good week this week trading. I've been doing my lockdown daily updates throughout this week. And so I have planned to continue to do that next week. But today we'll go through the indices here and equities. As I've tweeted out that I will rotate these. So 1 week we'll look at Russell and banks. 1 week we'll look at Nasdaq, maybe semi. 1 week we'll look at some different stocks, and we'll kind of rotate each week. But I do want to look at Apple almost every week, and I do want to do a short take on Spider every week because of your request on that. And gold, also I'll rotate. Last weekend we looked at IAU, the gold shares ETF. We'll look at GDX. Maybe next week we'll look at silver. Bitcoin, we'll keep that there. I just want to do a quick follow-up from yesterday's daily update. So this was yesterday right here. It looked like this yesterday, right? So this is what it looked like yesterday. And on the yesterday's update, we talked about that, what bears want to see is bring it down, see a continuation. Because we did see on the last hour of trading yesterday, we did see that late day, selling pressure towards the end of the day. And it continued on. And there was no buying activities. As you can see, there's barely any wick there. And so I think a lot of people are looking for that gap down and looking for that continuation to the downside. And this is why I think it's important to understand the overall sentiment. This is why I've said that we want to give benefit of the doubt to the buyers in the minor term, right? And that's the word I've been using pretty much throughout this week for the fact that we have higher lows and higher highs, and we are dealing with that longer term moving average. We've been talking about this, we've been tracking this entire week. So despite the fact that we had selling pressure towards the end of the day on Thursday, we still want to give benefit of doubt. That doesn't mean we're for sure going to see a bounce. We could have gapped down today. We could have continued lower and see a follow through. And that's why I gave you guys 277, 276 level yesterday, right? On that daily update. And then what we talked about yesterday was, what bulls wants to see is maybe a gapping it up. We did see a gap up this morning. We pulled back, but that once the gap was open, we saw that it kind of nullified that short-term selling momentum. So even though we saw a decline early morning, throughout the day, you can see that now that moving average, the shorter-term moving average, look at a lot of dip buying activities been occurring in that vicinity. There are a lot of whipsawing going on here, and then now that the shorter term moving average was flattening out, which we talked about yesterday, and I talked about how what bulls want to see is these levels holding, and that moving average start to rise yet again, because this was declining, flattening out. There was some battle going on here. The support held, and then it started rising again, and that's what we saw. That move, pull back, retest, and we're rising once again. We're now back at this resistance. So quick kind of a update on that. So let's go to our list here. Let's start with the Russell 2000 IWM. I know Russell 2000 has beaten down quite a bit compared to, because Nasdaq is. It's getting pretty close to where the all-time high is, but the Russell 2000 is nowhere near that. But I thought this was interesting. If you actually go to a monthly chart on the Russell 2000, I'm looking at IWM, which is a Russell 2000 ETF. Obviously, this decline was like 60%. I think this was about 35, 40. But just the manner that it felt, you can see how Russell, that was the peak, and then we had that lower high, and then that thing just absolutely just you know what I mean, decimated, right? Very similar pattern here. We got that peak and we got that lower high, and that thing just tanked, right? Just completely decimated. And so if you look at it this way, and I get it, it's never easy, you know, trying to call bottom. But looking at this here, I mean, I have to say 2009 was way worse, man. 2009, as far as, obviously, it's just my own opinion. I don't want people to go crazy on me that I said this, but I think, in my own opinion, and you could have your opinion too, you know, regarding current sentiment, of economical sentiment at least, I actually think 2009 was way, way worse. Right now, in my opinion, is not nearly bad as 2009. Meaning, I actually think that, you know, this dip is much, much more viable than here. It was very, very difficult to buy these lows back in 2009. But if people did that, there was a, you know, there was a lot of there was a reward that came with it. I mean, obviously in the stock market, the greater the risk, the greater the reward. And so I think, you know, just looking at this perspective, I think that's kind of what I'm seeing here. We're kind of, you know, building some kind of low here. Again, I said in last weekend's video that I don't know about Russell though. I don't know about Russell, and I don't know about banks. And what I said was last weekend's video, the market update video, I think it has a very low chance, low probability for Spider or Qs or semis, probably also Diamond, Dow Jones, to retest the lows, meaning March lows. Russell 2000, because they're much weaker. Banks is much weaker. Let's go to it here in the banks. And quickly in the short term, we're kind of sandwiched between. You did have a little double bottom here. And it's a good thing that we're holding up above this neckline of this double bottom. That's a good thing. And we have what it looks like a consolidation pattern. Again, this is a bullish flag, bullish pennant pattern. But you guys know that I don't really rely on these too much because it could break out either way. But if we do see a breakout to the upside, there's a good chance that this thing coming up here, getting up to somewhere at this level. If this thing break lower though, that's gonna be where you're gonna see this thing start coming back down, at least to let's draw a trend line like that. Right? So if we see a breakdown from here, we're gonna have a, you know what, there's actually gap here. I wanna annotate that gap right here. So we're gonna at least come down, you know, retest this rising support, if not 109. So let's do 109 and let's do 133. So I think upside target, if we do breakout, is 134 Russell. If we break down, the first support is that, you know, the rising uptrend support, the short term 112, and then 109, potentially 105. So we'll put it there. Let's go to the banks. XLF, very similar story here, you know, and so we're kind of holding up in this vicinity, right? And what it looks like, potentially a bull flag or bull pennant type of pattern. And I think same logic applies here. So let's annotate the gaps first. We got a gap here. We got a gap here, right? Right. And then we have that. This was an important gap right here. This is important gap. So we're gonna annotate this green because that's an island gap, right? That's a gap down. That's a stronger gap. That's a stronger gap. And then we have another gap here. I don't think this is, yeah, that's not gonna work this way. So I think, let's do this like that. So if we do break out of this bull pennant pattern, looks like it's been coiling up, but it's been cultivating in a short term, low, higher low, right? So if we do break out to the upside, it's going to try to retest that recent high. And then there's a gap area. And that's something we'll talk about, next time when we visit XLF. If we do break lower, then bear is probably gonna come down, trying to challenge this gap area 2059. And again, this being an island gap, if this gap does get filled, it would act as pretty strong support. If bulls defend this, like let's say bears come bring it down next week, right? And bulls defend this, that will be better for this momentum. So we have some minor term momentum here that built, right? Just since the March lows, we got higher lows and higher highs. So, let's say bears bring it down early next week, and then we challenge this island gap. If we do bounce from here, that could be a very, very strong bounce. So it'll be better for those bulls to keep that island gap, the green box, so that the bulls can have that short-term bullish momentum going. But if the gap gets filled, it's not the end of the world for the bulls. We're probably gonna act as strong support, but at that time we wouldn't know, did we feel that to get up, and then maybe this moving average right here continue to decline, and then we see the retest of low. You see what I mean? So that, again, that's for another update. But so we're just right at the juncture. Whether we break out to the upside or to the downside, that's kind of what we're dealing with here with the Russell and the banks. Let's go to equity here. Let's look at Apple. So Apple, and we talked about this, the cluster, the moving average cluster on the last weekend video. And I tweeted this out right, when that was happening. So we first filled that gap, and then we continue low. And I think this was Tuesday, right? And you can see that there was that clusters of moving average. Right, you see that all the moving average was colliding, coinciding, and that was there even crossing up. So that was 269.49. I'm pretty sure that was Tuesday, 21st. Yeah, that was Tuesday. So when we saw the market coming down, and that's where exactly we found support. And I think Tuesday sentiment was pretty bearish, right? I mean, spider gap down, we saw flush. So Tuesday, I think, the market, there's still a lot of fear in the market for the fact that we saw a pretty steep decline that we haven't seen since, this thing got up in April. So I think this is the first time we've seen pretty sharp decline. I mean, we saw gap up and fade, but overall, there wasn't much change in a percentage-wise. But in April, this was the first time we saw like a follow-through, right? 1, 2, 3, like 3-day follow-through to the downside. So Apple, you can see, same with the Qs, because I also tweeted out about the Qs. It's similar look there. And now we bounce from that, and you can see all these moving averages seeing a bullish cross, all of them. Do you see it right here? All of them, we crossed it up, and now we got the 20 and all these longer term moving averages starting to rise higher. And with today's one, we got a slightly gap up there, right? And look at that completely shaved candle. That's a Marubozu candle, pretty strong candle there. And right now, bulls are really gaining momentum in the minor term on Apple here. We got the uptrend support there. We got a lot of these gaps are open now. This gap is open. This gap is open. Why did I make this one like that? Okay, it's like this. And there's a smaller gap here. There's like tiny gap, right? So we got 1, 2, two smaller gaps. And we've been talking about, again, if you've been following me the last several weeks, the longer these gaps stay open, the better it is going to be for the buyer. So Apple is looking pretty good here. And let's continue here. Twitter. So Twitter is actually starting to look a little bit vulnerable to me. And you guys know, if you've been following me on my blog, I've been long-term investor since 19 on Twitter, and I've been buying these dips also. Well, recently, actually at 28-ish area, I've closed out my, not all of it, not completely, but I've been closing out my holdings, not because I don't believe in Twitter anymore. It's because I want to disperse that funds to other stocks, right? To other underlying securities, so I can kind of because I felt like there is a bit of a vulnerability on Twitter, right? And so because Twitter doesn't really have a strong uptrend, not like Apple, not like some of the other stocks that's been prolonged uptrend, like Google, Netflix, like Facebook. The only thing Twitter really had was this big move, right? And then ever since then, it's been really grinding and moving sideways. And I think what I kind of concerned about is we got this lower high and lower low. So intermediate term, I have to give benefit of doubt to the bears in the intermediate term. So I closed quite a bit of my holding. I'm still holding some, but quite a bit of it. I might get back in when the sentiment changes, when the trend improves. Right now, I'm still long, but I wanted to disperse that money and I want to buy other stocks with it. That's why I did that. And I did that around 28, 27 here. And so, but right now, it looks like we're right below this level, right? And I think Twitter did a good job of first that level, that prior support act as resistance, and we broke above it. And then this was a second pivot, right? Prior resistance or support, and now currently acting as resistance. The best case scenario, and this is kind of a wild card, is if this is actually a bear trap, right? And if Twitter really want to turn this around, we first have to kill this lower high, lower lower sequence by going up, creating an equal high, pulling back, and doing something like that. And when we pull back somewhere in that vicinity, that's where I'll be adding back, right? So right now, this is going to be an important level here. We want Twitter. There's actually gap too, so that's going to make it a little bit tough. You know what though? It's going to make it tough, but if Twitter really want to jumpstart this thing, why don't we make this into an island? Gap it up, then that thing is going to go up, shoot up quite a bit to like maybe 38 or 40. At least it's going to come and retest this level. If I see a gap up, this thing turns into a island bottom after making lower low, that's a pretty strong bear trap. If that happens, I'll probably buy more. A little above 30s there, making sure it stays above it, because you don't want to see this thing gapping up and crapping and just falling back. That would be not good. So we want to make sure we hold above it, right? Let's go to Wells Fargo. So all of these stocks that I am covering today, I own all of those in my portfolio. Apple, I've been accumulating since the lows here. And I've been accumulating Apple actually since I've been actually buying all these dips. And if you even follow me, you guys know that I've been trimming my positions in Apple up here. I've been closing most of it actually up here. And then when it started pulling back, I started adding. I first actually added here and then added there and then added here and then added there, something like that. So because I'm a long-term investor, like I'm not trying to pick perfect bottom. But if I can able to buy near the lows and I can ride it for the next 6 months to a year. And I just covered Twitter. Wells Fargo also, I've been accumulating at these levels, at these lows. Only shares on these equities, because Wells Fargo, if we go to monthly, so this is a monthly of Wells Fargo. Here, let's delete that. Just get a little bit messy here. This is a monthly of Wells Fargo, and looking at this is a log scale, so they look a little bit different, but. You see that with a big base, broke out, huge move. This is 2008 financial crisis. Wells Fargo really truly tanked. But look at that V shape there. Not only that, we had a left shoulder head, right shoulder, perfectly executed inverted head and shoulders. That was confirmation. We made a rally there. Actually, that was a big rally. If I actually go back here, see that's a big rally. Well, we're right here. And nobody knows where the bottom is, right? We could continue lower, or maybe Wells Fargo continue to tank. Sometimes you just have to take a risk, right? You have to take a risk. Something that I like to say is market rewards the risk takers and punishes the chasers. I always think that buying at these lows, that's my opinion, is actually less riskier versus buying it after a prolonged move, or like after buying it after you think it's been broken out, right? Because think about this. Let's say you bought it here, right? and then that thing tanks, man. Your drawdown is pretty big, right? Your drawdown is pretty big if you bought it on that breakout. That's 60% drawdown, right? Because you saw this, we did, we made a higher low, higher high. So you waited until it looked quote unquote safe, and that's how you get decimated, right? But what if you bought the dip, right? Instead of buying it up, then your drawdown, even though you're still losing money, your drawdown is still a lot, but it's like 40, 30%. It's not bad compared to 60%. You see what I mean? And obviously, this is kind of a worst case scenario. It doesn't happen. The last time it happened, something like that, was 10 years ago. So overall, in my approach is I always think that it's less riskier to buy. And especially companies like these, like Apple and Wells Fargo, that I think, I know right now they're taking a hit, but overall, fundamentally, I think, once the economy recovers, I think these guys will make its run to the upside. And it's always, people always say, man, Kay, if I knew what I knew, if I would have bought stocks, man, back in 2009, 2008, well, I would have been so rich. Well, you didn't. Well, you know how people always say that? Well, you didn't. There's no, people always say stuff like that, but even though, let's say you bought it, there's no guarantee you're going to hold through this all shenanigan up and down here and back in 2010 and 11. So don't be saying like I could have bought it at $8 a share and I could have sold it at $50 a share in Wells Fargo. People always say that, but you didn't. You see what I'm saying? So there's your chance, right? And something I always say is that buying the dip is the most terrifying thing you're gonna do because you have to go against your human nature, right? We're not designed, we're not trained, right? We've been conditioned. We're not trained to buy, to spend money when when you're experiencing deficiency in your account. You've been conditioned your entire life to what? To save, to be defensive when there's a deficiency in your bank account, but to spend when there's surplus. That's why most people buy high and sell low, because when the market is going up, you're in a buying mood. Because the reason why is because you've been trained this way your entire life with your bank account. When there's surplus, you spend. When there's deficiency, you're tight because you gotta pay your rent, you gotta pay your bills coming up. You don't spend. You gotta do the opposite when it comes to stock market. Let's go to Boeing here real quick. Boeing truly tanked. I think let's go to monthly here real quick. I think from the peak, like 70, 80 some percent here. So let's go to log scale. I think it makes more sense if we go to log scale, right? So let's just bring it out here. So you can see throughout the life of Boeing, Boeing suffers these kind of declines before, right? This is not the first time Boeing is experiencing decline like these, 67, 65, 70, 73. So if you look at this overall picture, right? When was the best time to buy? When the Boeing was soaring? No. When the Boeing was soaring? No. When the Boeing soaring? No. That's what everybody wants to buy. The best time really in 1980s was when that thing just tanked. Best time to buy? 2003. Best time to buy? 2008. Again, extremely difficult. Extremely, it's a terrifying thing to do, to buy these dips. And you could say, well, okay, this time it's going to be different because Boeing is going to go bankrupt. Then it's not for you, right? It's for those who's willing to take a risk. And obviously, you're not going to go put your entire portfolio on Boeing here. No, you're going to spread it out. You want to, you want to practice, what's the word I'm looking for? You want to spread them out. Diversification. You want to diversify. So I do own Boeing. I bought at these lows, near the lows, but I don't have a lot. It's not like my entire portfolio is on Boeing. So if Boeing actually goes to bankrupt and goes to nothing, I'm okay. I'm fine with that because I have a multitude of stocks that I'm holding in my portfolio. Let's go to Darden Restaurant. So Darden Restaurant is a very, very similar. I think, looking at more of a daily chart though, this is daily here. I really like the fact that Darden Restaurant was able to cultivate high lows. And that was the neckline. That was the neckline, right? We got up, pulled back, and we are in a slight sense, higher lows here. And I get it. This is very, it's still very much fearful. I mean, who knows when this thing is going to start tanking, go back to new lows? Nobody knows. So as a long-term investor, your objective is never trying to pick perfect bottom, because nobody can do it. But like I said, it's not the first time, Darden Restaurant suffered something like this, right? It's not the first time, right? It's not the first time they suffered something like that in 2009, something like that. How many times you wish you bought it here? We have another opportunity here in Darden Restaurant. Again, you want to manage risk. You want to make sure you're not too leveraged or too heavily. That's what, again, you want to disperse it. You want to diversify, right? Have some on the Darden, have some on Boeing, have some on Apple, have some on Intel, right? And have some on indices. And so you want to, and have some on gold. So you want to diversify it well, especially right now, because we have stocks like Apple doing well. We have stocks Amazon just soaring. We have stocks Intel holding up well and still making it smooth. We have stocks like Darden Restaurant. We have stocks like Boeing. We have stocks like Wells Fargo just tanked. So you can't just go heavily on one stock, couple stocks that has completely tanked. You want to diversify well, because you got like Google, you got like Netflix. They're just holding up really, really well. Especially Netflix made all-time high. Let's go to Disney. I also, I never really invested in Disney. I've never invested in Disney. Do you know why? Do you know why I've never invested in Disney? I'm a type of person that I never buy rising stock. I never buy. It never gave me opportunity. Everybody, because I didn't see it. It wasn't in my radar. When I saw last time, I was like, okay, I can't buy that. And then when this happened, no, I'm not going to chase that. Never invested in Disney. When I saw Disney just tanked like this, I'm like, okay, now I want to buy some. So I got into Disney. I've been accumulating in this vicinity here, like 90, I think 99 and 94 twos. And obviously sentiment is bearish. It's bearish. And I'm not sure we're going to have, make new lows. I don't know, right? I don't know. But looking at the longer term, I thought this was a good value, and I bought it because for my value play, right? It would have been, again, going back to log scale here. Again, it's a good time to really, accumulate. And I'm a long-term investor. When I buy stock like this, I'll hold for a couple years, several years. So, good time was somewhere here in this vicinity. Good time was somewhere in this vicinity. Good time was somewhere in this vicinity. Never after it's been soaring. But again, we as a human being in our entire life been trained to be scared, to be defensive when stocks are tanking like this, right? So, I think this is a good value play. And I'm not sure, is there a chance that Disney could make lower low? Yeah, of course. There's always chance. That's what it means to take a risk. But like I've always say, market rewards the risk takers and punishes the chasers, right? And so right now, again, in Disney, and all same, Wells Fargo, Boeing, Darden Restaurant, Disney, they all have same look, which is that moving average is still all declining. All moving average still declining. That means we're all still in a bearish downtrend. That means they're highly risky in the short term. But I'm not talking about short term when I talk about these guys, right? Let's go to GDX here. And what I really want to talk about on GDX is a multi-year breakout. And so you can see that it's built that base. So 2013 is 2020. That 7-year base with higher lows intact, and we just made higher high for the first time in 7 years. Right? So I also own GDX, and I've been buying these dips here and accumulating. And I didn't sell anything on this pullback. I didn't even buy it either. I just held it and just very, very quickly got up. Right now, I'm thinking about, buying more if we do see a pullback to retest, right? If it continues higher, then I'll just continue to hold. One last one, I'll let you guys go with this. This is a Bitcoin here. So it's funny because last week, didn't we talk about this last week? Last week, so two things we talked about last weekend is that, well, first, we want to give benefit of the doubt to the bears because we still have lower highs and lower lows. And we're trading below this prior support. But I gave you the wild card. What is a wild card? Well, if bulls want to turn this into a surprise, we want bulls to turn this into a bear trap and thrust higher, right? With good buying pressure. And it looks like there's a good buying volume here that you see that. So if we can hold that, we hold this level, there's a good chance that we might get up. We might get up to maybe at least potentially to retest that level. We do have a pretty sizable gap. So I think that gap there is gonna probably it's gonna give some trouble to the bears or buyers, to bulls, for the fact that we're still on a downtrend, right? So I don't have any position on Bitcoin at this point. I have no position on it. So just so you guys know, but let's put that there. So I think as the bulls continue higher, the gap area is gonna give them some trouble. So know that there's a resistance here, that falling resistance, and then we have the gap. But I think this is a great move that we were hanging in there and then we popped. And so if this becomes that wild card, there's a good chance that Bitcoin can get up here and fill this gap, right? So that's it for me today. Looks like Spider is holding some of the key levels, and we got now this gap remains open. It was threatened for a couple of days, Wednesday and Thursday, but as of Friday today, the gap is open. We got three gaps. We got the breakaway gap, island continuation gap, another continuation gap, right? So as of today, I want to continue to give benefit of doubt to the buyers in the minor term and the short term. And if we can hold those levels, looks like next week we're probably going to come up here and try to fill these gaps and challenge those down gaps, right? So you guys have a wonderful weekend, and good luck trading next week.